XRP just did something that's making a lot of long-term holders nervous. It's now sitting less than 4 cents away from a price level that hasn't held in months. Welcome to XRP Financial Horizon. I'm glad you're here because today's breakdown covers a shift in XRP that most people are scrolling past without realizing how significant it actually is. We're looking at the headline everyone's talking about. XRP clings to support as bearish momentum and ETF outflows intensify. Stick around because by the end of this, you'll understand why some traders are paying closer attention to this dip and what level actually matters if you're holding this token right now. Right now, XRP is changing hands around $1.04, and that number matters more than it might seem at first glance. It's steadily working its way down toward the 1.00 mark, a level that traders treat almost like a psychological floor. When a coin approaches a round number like this, it stops being just a price point and starts becoming a decision zone. Some buyers step in expecting support, other sellers push harder hoping to break it. The payments and remittance corner of the crypto market, where XRP has always positioned itself, is still searching for real momentum, and that struggle is showing up directly in the daily chart. This isn't a sharp, panic-driven sell-off either. It's slower than that, more like a steady erosion, the kind of price action that tests patience rather than triggering fear all at once. Here's something worth pointing out before we go further. XRP isn't dealing with this pressure by itself. The broader crypto market has cooled off noticeably over recent weeks, and that mood tends to spill over into individual assets, regardless of their own specific story. When traders across the board start pulling back, it doesn't matter how solid a project's fundamentals are, the price still gets pulled along with the tide. You can see this hesitation showing up in reduced demand for crypto investment products and a derivatives market that's trading with noticeably less conviction than usual. Nobody's rushing to place big bets right now, and that caution creates thinner trading volume, which then makes price swings feel sharper and more exaggerated than they normally would. It's a bit of a feedback loop, and XRP is caught right in the middle of it. Let's talk about market sentiment for a moment because this stat alone tells you a lot. The Fear and Greed Index, a tool that essentially measures the emotional pulse of crypto traders, has dropped to 15 as of Wednesday. That reading falls firmly into extreme fear territory, and historically, that's the kind of number that shows up when investors are genuinely on edge. What's interesting is how this fear feeds on itself. Nervous traders hold back from buying, which limits demand, which keeps prices under pressure, which then feeds even more nervousness. It's a cycle that's tough to break without some kind of spark, whether that's a positive news catalyst or simply time passing and sentiment naturally resetting. This is a big part of why XRP feels stuck in such a tight range right now. There just isn't enough buying conviction to counter the sellers. Now here's the part that caught a lot of people off guard. XRP spot ETFs just posted close to $3 million in outflows on Tuesday, and what makes that number sting is the timing. Just days before, these same products pulled in $16 million on Friday and another $15 million on Monday. So within a matter of days, we went from healthy inflows straight into net selling. That kind of quick reversal tells you something important. ETF investors are reacting fast to shifting sentiment. They're willing to jump in on optimism, but just as quick to pull money out the moment the mood shifts. Some market participants view ETF flow data as one indicator of broader investor sentiment, not just retail traders on social media. And right now, that sentiment looks noticeably more cautious. Before this starts sounding like a total collapse, though, let's zoom out because the full picture tells a more balanced story. Even with that single day of outflows, cumulative inflows into XRP ETF products remain solid at $1.48 billion. Average net assets under management are sitting around $944 million, according to SoSo Value. What that tells us is pretty simple. Short-term sentiment is jumpy and reactive, sure, but the longer-term conviction behind XRP as an asset hasn't disappeared. People who built positions early are largely staying put. A single rough day in the flow data can make headlines look scarier than the underlying trend actually supports. And this is a good example of exactly that. Here's where things get a little more revealing. For XRP to really turn a corner, it typically needs strong institutional buying to offset weaker retail activity. And right now, neither side is showing much conviction. According to CoinGlass, perpetual futures open interest has dropped to $2.31 billion as of Wednesday, down slightly from $2.35 billion the day before. Now compare that to the peak back in July, when open interest touched $10.94 billion. That's a massive pullback in trading activity. Lower open interest can indicate reduced participation from traders, and it suggests that any real recovery is probably going to need that retail energy to return before momentum can meaningfully shift. Let's shift into the charts, because the technical setup here is fairly consistent in its message. XRP trading at $1.04 puts it below several key reference points that traders lean on. It's sitting under the Bollinger Middle Band near $1.12, and it's below all the major moving averages too. The 50-day EMA is up around $1.19, while the 100-day and 200-day EMAs sit much higher at $1.30 and $1.52. When price is trading beneath this many moving averages at once, that's usually a strong signal the near-term trend is leaning bearish. Think of these averages as layers of resistance stacked above the current price, each one representing a hurdle that would need to be cleared before the broader trend could realistically be called into question. Digging a bit deeper into momentum, the MACD histogram on the daily chart is sitting just slightly negative, which lines up with what the price structure is already telling us. Sellers still have some control. Meanwhile, the RSI is hovering close to 32, just above what's typically considered oversold territory. This level is worth watching closely, because when RSI drops this low, it can sometimes set up a short-term bounce as selling pressure temporarily exhausts itself. But it's worth being clear here, a bounce off oversold conditions isn't the same as a trend reversal. It's more like the market catching its breath, and with so much resistance layered above current price, any bounce will likely face a real test before it turns into anything more sustained. If XRP does manage to stabilize and push higher from here, there's a clear roadmap of resistance levels standing in the way. First up is the Bollinger Middle Band around $1.12. Get past that, and the next challenge sits at the 50-day EMA near $1.19. Beyond that is the Bollinger Upper Band close to $1.24. And even clearing all of that still leaves the more distant 100-day and 200-day EMAs looming at roughly $1.30 and $1.52. Each of these levels represents a point where sellers have previously shown up, so any real recovery is likely to be a gradual grind rather than a sudden breakout, with plenty of resistance to work through along the way. On the other side of this, if selling pressure continues, the next meaningful support sits at the Bollinger Lower Band, close to $0.99. This zone matters a lot because a clean break below it could open the door to a deeper pullback, removing one of the few technical cushions currently holding price in place. This is exactly the kind of level that tends to draw a lot of attention from both sides, buyers looking to defend it and sellers looking to push through it. How XRP behaves around this 1.00 area over the next few sessions could end up shaping the next real directional move, so it's worth keeping a close eye on. So pulling all of this together, what does it actually mean for anyone holding XRP or watching from the sidelines right now? We're clearly in a period that calls for patience more than urgency. The technicals lean bearish, sentiment is fearful, ETF flows have gotten choppy, and retail trading activity has cooled off noticeably. That's a lot working against the price in the short term. At the same time, the longer-term ETF inflow numbers show that conviction hasn't fully left the building. There's still real money sitting behind this asset over a longer time horizon. Watching how price reacts around $1.00 on the downside and how it handles $1.12 and $1.19 on the way up will likely tell us far more about the next move than trying to guess based on headlines alone. Zooming out one more time, this situation is a good reminder of how tightly sentiment, ETF flows, and technical structure are woven together in this market. It's never just one factor driving price, it's the combination of all of them at once. Right now, that combination is telling a story of hesitation, a market that's genuinely trying to find its footing again. XRP holding near support isn't automatically a bad sign. Support levels exist precisely to be tested, and how price behaves at moments like this often reveals more about underlying strength than a calm, uneventful chart ever could. As always, markets like this can shift quickly, so treat everything here as information to think through, not a signal to act on blindly, and always do your own homework before making any moves with your money. We'll keep tracking XRP's price action, these ETF flow numbers, and the key technical levels closely, so you're not caught off guard by whatever comes next. That's where things stand for XRP right now. If this kind of breakdown is useful to you, subscribing helps you catch these updates the moment they matter, not after the move already happened. And I'm genuinely curious. Do you think 1.00 holds here, or are we looking at a deeper move down first? Drop your take in the comments. I read through them and it shapes what we dig into next. Thanks for watching, and I'll see you in the next one.